Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 14th, 2024. And today I'd like to talk about a few things. I'd like to talk about why this weekend is more likely than not when we can expect to see this massive move down in Bitcoin and the rest of the cryptocurrency market that I've been predicting on this channel. And I'd like to talk about how this is quite clear in the charts, right? There are lots of top signals, so we're going to look at them. And I'd like to address the idea that most people, I think, incorrectly hold that we're too early in the bull market for us to have such a correction, the likes of which I'm predicting, and that it's just unconscionable. It doesn't fit with the historical trends. I like to talk about that. So if all that sounds interesting to you, then watch until the very end. Hope everyone's having a good day. Let's get into it. All right, let's start off on the 4-hourly time frame. As you can see, my watch list is predominantly red. I do expect it to get much more red as the day progresses, as the weekend progresses. I think we haven't seen anything yet. Like I've said on this channel, many people were shocked by what happened here when we flash crashed to the bottom of this channel that we've been in since the end of November. So the 21st of November, it's been almost 2 weeks, if not more than 2 weeks rather. Let's see, how long has it been since we've been in this purported distribution channel? It's been 22 days, almost a month since we've been in this channel. And so, yeah, a lot of people were shocked about that. And that is nothing. I'll just say that's nothing. If that was historical, like if that was an historical liquidation event in Bitcoin, in crypto, causing all these losses, like what I'm talking about, what I've been talking about on this channel for weeks now, is going to shock a lot of people. Probably not you all that are watching. Congratulations, by the way, for those of you who have the discipline and who have had the discipline to be in cash, to be on the sidelines, to be wary of this dog shit kind of price action. It's ugly. And I think a lot of people would agree, including the most bullish of the social media influencers. One of the reasons people are so bullish is because of what I stated in the beginning of the video, that they believe that we're in the bull market and bull markets don't see big drops like this. They just don't experience massive drops. The bull markets are characterized typically by, some corrections here or there, but by and large, obviously bullish price action where you make higher highs and higher lows, and obviously you correct somewhat, but 50% is nothing. Bull markets are characterized by much more growth. This is why a lot of people, I think, turn a blind eye to this, I think, quite clear and obvious distribution pattern, this corrective top pattern, okay? And what makes this toppy? We've talked about this before, but like I said, we've been in this for almost a month, 22 days specifically. And what makes it toppy? Well, from a technical perspective, you have the makings of a head and shoulders pattern, right? Head and shoulders is a quintessential bearish reversal pattern like that, right? But obviously it doesn't always look like this in the textbook. Sometimes it's slanted, right? Where you have your first attempt by price action to make a higher high and it fails. That's where you get your left shoulder. The second attempt to make a higher high and it fails, and then you come and make a third attempt. I think this is a third attempt. This is another way to look at what we've been doing for the past 22 days. And if you're bullish, let me say there's nothing encouraging about the fact that every single time we try to make a higher high at the 100K level, which is significant, and I'll talk about this in a bit. Every time we try to make a higher high at that level, we have a staunch, strong, definitive rejection. Okay, that was the first. That's the second. You could say that's the third, and you're about to get a fourth, right? Look, it's really trying. I mean, really trying to make a higher high here. Why is 100K so staunch of a resistance? It's not just because it's a psychological resistance. There is an actual reason in terms of the technicals that I'm going to show you in a minute why 100K is unlikely to break at first go. It just doesn't work like that. Any resistance typically takes a few tries. And what does it mean? What do I mean by a few tries? Well, in order to break staunch resistance, you need verve, you need oomph, you need strength. That strength in markets is characterized by liquidity. You need buying power. You need enough buyers to break sell walls. How do you get liquidity in markets? Well, you dip down and you grab it, okay? And you gotta dip down sometimes low enough to grab liquidity. And this is why this liquidity grab is healthy. If people really understood what's likely happening in the markets, they wouldn't be buying here. They'd be selling and still be excited at the coming bull market. Yes, I said the coming bull market because, again, a lot of people think that this is the bull market, right? What they think is the bull market. It is bullish price action, higher highs and higher lows. But as I said before on this channel, and I'll reiterate it because there are a lot of new subscribers, welcome by the way, that bullish price action does not a bull market make. Just because you go higher high and higher low doesn't necessarily mean you're in a bull market. Look at this price action. I mean, just look at it. Characteristically, look at it. Look at it. Ever since you're in this, I mean, it's just chop sideways up into the right chop. That's what it is. When you're talking about bullish price action, and you can go in Bitcoin's history, you'll see really strong, up, straight, erect, green candles. You don't see that here. So just the look of this should tell you something. That doesn't look really bullish. It looks up and to the right bullish, but it's not very bullish. You're looking for strong, verve, convincing green candles to the upside in a proper bull market. And this is why I will reiterate my stance on the fact that the bull market, as people understand it, has yet to begin. And if you look historically, now let's go over, we already talked about the top signals on this chart. Yesterday we talked about, or 2 days ago or something like that, we talked about from a Wyckoff analysis perspective. You can see how this very much looks like a Wyckoff distribution pattern. Okay, it has all the makings, all the markings of a Wyckoff distribution pattern. Your first hit, your automatic reaction, your ultimate up thrust after distribution, right? And your last point of supply, all that stuff seems to be in this schematic. And from a Elliott wave perspective, if you're looking at it in terms of 2 degrees of AB basing in a pivot, right, you see that's the initial break, that's my A wave, that's my B wave, that's my first pair, that's my secondary, that's my secondary counter, right? So that's my secondary break, secondary counter, tertiary break, tertiary counter. That's it. That's all there is. Now we finish. That's what I'm seeing. So in a lot of ways, right, this is very much completed. 22 days of distribution, 22 days of, what does it mean when you say distribution? 22 days of getting people to think, oh yeah, we're going to go higher. Continue to buy. All the while they're accumulating these buy orders only to sell them. You need something to sell, right? Only suckers buy before the sellers sell, right? They buy the top. This is the top. And now the sellers are selling the top at the highest price, and they're going to continue to do so all the way down to what I believe is our target of 66K, thereabouts. That grabs enough liquidity to start the bull market. That happens in a flash, right? I think it's in two parts, to be honest, right? Because we have very clear pivots right here, right? So that's our first bounce. Retest the midline of this channel that we've been in for 22 days. And before you leave a channel, as always, got to retest the midline before leaving it. So I think that happens. I think a lot of people get psyched out about that. A lot of people who don't read price action, don't understand shit about what the charts are saying, think, oh, that's it. That was it. That was the flush. That was what we're looking for. And they're going to think that we put it in. But actually what you're doing here is, if you look at it, come on, work with me here. There we go. You're putting in an even larger head and shoulders pattern, a bearish reversal pattern, which is going to take you down to your next logical target, right? Where your next pivot is. I mean, the charts are screaming all this. It's like you can't see it, though, when you don't want to see it, right? You don't see what you don't want to see. That's what I've seen in my experience, 8 years of doing this, 8 years of doing this. You really don't see what you don't want to see. And so, as obvious as it may be, you're blind to it. Like, they're clear signals saying, sell the top. And when you say that to a lot of people who have made a decent amount of money and stand to make even more money when the price goes even higher, they feel personally offended. And they say, well, I'm not selling the top because my dreams are beyond here. Once this goes up, my dreams of retiring my family, retiring my mother, like, building a better life for myself, paying my medical bills, paying my family's medical bills, paying my friends' medical bills, they're all on the other side of this. So I'm not going to let anybody make me believe that that's not happening, because if it doesn't happen, I don't know what I'm going to do. That's literally the mentality. So you have to understand why people are so attached to this going up, and they kind of throw away everything they know about what a chart's supposed to look like when it's bullish, right? This is quite clear. You're forming these head and shoulders bearish reversal patterns. You finish the head right here, you come up, you make the right shoulder right here, and then you break down completely for your final retest of this multi-year. Let's look at this right here. And right after this, I'm going to switch to my master chart showing you why 100K is really nothing to play with. And there's no way on God's green earth 100K breaks in one fell swoop. Okay, look at this. So we're going to go on the weekly. And as you can see, I've shown this before on the channel. This 66K level is a multi-year level. You broke out of not just this descending broadening wedge, this megaphone pattern, but you also broke out of this massive inverse head and shoulder. So like on the small time frame, you see bearishness. On the large time frame, you have to be extremely bullish for crypto and Bitcoin. On the large time frame, and this is why really when you talk about are you bearish or bullish, it really depends on the time frame. Because if you zoom out enough, how can you not be bullish when you see this massive multi-year inverse head and shoulders that you broke out of right here, and all you have to do is come back and retest it? A 66K retest is nothing from the perspective of this bullish pattern, right? It's only really bearish and really grim and really negative when you're focused in and zoomed into what's happened in the past couple months. But if you really, really think about it, this retest is so bullish. The 66K retest is healthy because it basically confirms this massive 3 to 4 year bullish reversal pattern is going to break out and give generational gains in crypto and the rest of the cryptocurrency market, in Bitcoin and the rest of the cryptocurrency market. Okay, that's my point. I've made that before, but I know there are a lot of new subscribers. Thank you for your subscriptions. I wanted to show that again. Now let's go to the master chart. I'm going to show you why 100K is nothing to play with, and why people, if they really zoomed out, if they really understood what the charts are saying, they wouldn't for 1 second believe you could just summarily disregard 100K. Okay, this is my master chart. This is the index, meaning this is the chart of Bitcoin throughout its history, as far back as it can go, okay? and I've marked it up with my Elliott wave count, everything like that. That's not really what we're looking at right now. What I want to draw your attention to is the fact that for 10 years, Bitcoin has been in this channel, matriculating up and to the right in this channel. And what happened in 2022 was that we lost this channel for the first time in Bitcoin's existence. We lost the bottom of this channel, but it's not really losing it insofar as like you lose it and it's, you know, it's goodnight Irene. It's you know, you're temporarily dipping below support, which happens. So you temporarily dip below support, and that's basically what we've been doing for, you know, since 2022. We've been playing beneath support. This is why, even though we're going up and to the right, it's not very bullish, because you're basically consolidating under the support of a 10-year channel, and now you're about to rip through. That's the idea. So 100K is, if you really think about it, at this point in time, it's a 10-year resistance, because it's confluent with the support level of this 10-year channel. All right? 10 years. And I mean, if you don't know anything about technical analysis, the idea, the longer a trend has happened, the longer a support or resistance is in play, the stauncher, the more definitive, the more reliable it is as a support or as a resistance. So if you look, Bitcoin has reliably been trading in this channel since July of 2013. Okay? That is a long time. That's 4,179 days, right? More or less, approximately. They're not going to break that on one fell swoop. You need to grab enough liquidity, which is ammo, to break that sell wall, which means, quite practically, in this case, we dip from 100K, come back to 66, get the liquidity needed to really face that. You see this right here? Grab the liquidity, then boom, we blast through it. That's what I'm seeing. I think it's quite obvious. Again, I don't think that, given, you know, if you asked most of these influencers and you gave them sodium pentothal or whatever it's called, the truth serum, and you said, well, let's have a moment of clarity and forget everything that you want to do once the price leaves this region, what do you think about this chart? They'd say, oh, it's obvious, right? You broke resistance, you just retested as support, and then you're on your way. If you show them this and you didn't tell them the ticker, you didn't tell them the asset, you didn't tell them the timeline, 9 out of 10 would tell you this is obvious, you know, technical analysis 101. This is your bullish reversal pattern. That's the breakout, retest, boom. Nothing else to it. It's very simple read. But people can't do very simple reads, and what makes technical analysis difficult and trading difficult, trading more than technical analysis, is because you get so invested and your emotions cloud your judgment. This is why it's very challenging. And, you know, as much as you got on the line, the more you have invested, the harder it is to see these things objectively. So yeah, this is why I think, one, it's quite clear that we're coming down. Now, I think we're coming down. Let's go back to our other chart. I think we're coming down on the weekend because weekends typically reflect bearish price action and sideways price action. So if we were to come down, it would be now. Given, one, what I'm seeing in the chart as I counted it. Two, the time we're in, the weekend. Three, the fact that we have an astrological indicator, the full moon, tomorrow on the 15th. And full moons typically designate local market bottoms in financial markets, right? It doesn't have to, right? But more often than not, probabilistically speaking, full moons indicate local market bottoms 0 to 3 days after the lunar event. So I think with a high degree of probability, we're coming down at some point this weekend, and it's going to be a flash liquidation event, the likes of which very few people have seen. Like I said before, expect some exchanges to go offline, expect some investment outfits to completely go kaput if they're over leveraged or not, if they're unprepared for what this is. And it's not that big a deal when you're thinking about it. It's just our first target is 15% away. But if this happens in 15 minutes or 25 minutes or an hour, it'll catch a lot of people off guard, unable to, add to their positions, add to their margin, right? Move their stops. It may take a lot of people off guard, catch a lot of people off guard, especially those that are, so blinded by the fact that they really want this to move, right? They got their stops here. That 14% may happen in the blink of an eye. So this is what I'm still seeing in the charts, and I've been saying for weeks now. So I would get the hell out of the way, and don't be surprised when we do, in some corrective way, probably in a three-wave move, because corrective patterns are characterized by three-wave moves. It could look like this, it can look like this, it can look all manners of ways, but don't be surprised when we find our way up back to the midline and we're not yet finished. So that's what I got for you. That's why I think that this weekend is really the time that we're going to see that move finally, and that it's healthy and it doesn't herald the end of the bull market and, oh yeah, this was the top, we're finished, the top of the cycle. People don't know what they're talking about when they talk about a cycle. They don't even know what a bull market is. They think anything up and to the right is a bull market. You have to be more specific. The cycle hasn't even started, to be honest. Okay, so that's my view on it. I hope this was helpful. I hope this was useful. Like, share, and subscribe if you got value. Consider buying me a coffee at the pinned comment below, or donating via Venmo or Cash App. Or you could even join my crypto portfolio consultation service that is going to be capped when I get enough clients, because I just can't spread myself too thin. But it's an hour to 2 hours one-on-one with me, and we analyze a portfolio of up to 5 assets, and I give you buy zones and sell zones for each and every asset, and help you balance the portfolio and manage your risk. Okay, that's it from me. Take care. Bye.